Good morning, everyone. Today is the 10th of June. This is Tuesday. This is Brad Matheny. This is the Plan Your Trade video. We are going to look at the S&P first. After yesterday's moderate kind of melt up, which is right in line with what I talked about today or yesterday, we had a very interesting move in the ES overnight. So take a look at this 3-minute move on the ES last night. Closed down here just like the S&P, consolidated overnight, rolled up considerably higher, well above this 60-30 area, up into the 60-40 area. So again, that's like the 603, 602 area on the S&P, then broke down hard. I mean, really hard back over here, just like collapsed. And now we're back pretty much where we started overnight. So as of close on Monday, I would estimate that this is a failed or rejected higher price. To me, this looks like a rejection of a potential move higher. So you can see how a rally overnight will potentially hold its own. Well, this overnight rally just collapsed downwards, establishing new lows. I would be cautious at this point of a move downward here today, given this type of rejection, this rally up, this failure here, and then basically a leg here moving down. So going to be very interesting to see how this plays out, but I see this as failure and rejection today. So we come back over here to the SPY cycle patterns. We are still melting upward. We are still generally bullish. Pre-market, we're at 600.38, so we're still a little higher, 0.12%. The cycle pattern for today is a pop pattern in carryover trend. To me, that pop pattern could have happened overnight with the big pop up and the rotation. So we'll see if that rejection continues to play out today. You know, we could get a pretty good looking kind of a pop pattern down here. You know, maybe something kind of like that. Where's my draw? There we are. Something kind of like a fairly good sized black bar over here to the downside. So we shall see how this plays out today. Looking like rejection may have set up overnight. We shall see if that rejection continues this week. We're looking at gold and silver. Again, recovering, trying to push higher. We've had gold and silver. This is a 1-hour chart. Really rolled through this rotation yesterday. Pushing higher in gold, pushing higher in silver. Silver's moving back up here to 37. That was my target level. Actually, 41 was my target level. 37 was my intermediate target level. Definitely hit that 37 level. You can see we've had this huge rally from the apex breakout here that I called. That was just last week. Rally, up basically $6, $3 up here in silver. And of course, gold has been broke out, rallied up, and then consolidated back down into the apex zone down here. So now we're looking at another attempted rally back to the upside. So I'm looking for gold to get up above 34, 34.20, 34.30 and rally. And I'm looking for silver to really stall out over here up above 37. I think we've got to get up in this 37.20, 37.40 area and then stall out back down here to 36.20 and then possibly roll much higher. So we're looking at a pretty good move here in metals, really. Really just looking for this to melt upward in waves. So where we're at right now with this rally phase is that we are kind of, I would guess, nearing the end of a wave cycle here with this move in silver. We'll see how it plays out. But long and short of it, guys, maybe nearing the end of a wave cycle here, maybe rolling back down into the 36 area. So what that would mean for gold if gold continues up is a move up into the 33.80, 34.40 area and then rolling over, I would think. Gold cycle pattern for today is temporary bottom in counter trend mode. I read that as a temporary top. We moved into warning on the short-term trend, meaning we're moving into kind of a sideways trend. And remember, we have kind of a temporary top today, maybe a gap stall revert flush pattern tomorrow, a breakdown pattern, and then a breakaway pattern. So, could be a very interesting move in metals while silver continues to move higher. I think silver is going to get up in the 37.30, 37.40 area, up in this area maybe, and then roll back down a bit and then just take back off. It's just on its way up to 41, 43, 44. So we'll see how it plays out. A Bitcoin, on the other hand, is 109.58. Was up to 110 yesterday. Very big move in Bitcoin last night. Now, we talked about this last week. Get rid of some of my crazy lines. And, I basically want to explain to you that, we've got those highlighted levels, 110, 500. And guess what? That was about the high yesterday. So we come over here, data window. Yesterday's high was 110, 587. And now we've rolled and rejected off of that level. Just right in line with my level here, coming back down here to the 106, 500 area. That's probably a pretty good target to the downside. I know we've got the 103 level as the breakdown level, which is really 102, 700 or so. But again, rolling into this excess phase peak pattern, peaking right up here at about the 110, 500 area, which is up in this Fibonacci trigger zone that I often talk about. Getting a pretty good rollover here in the markets up near this top. And we had very heavy volume on this buying day. This was, look at this. This was on an hourly. It's a pretty solid rally out of this zone. 105, 105 and a half, up to 110. That's a 5,000 point rally. And clearly above the 106, 500 area, ran right up to my resistance area, my 110, 500 level, stalled and then rolled over. So we'll see today. If this has any momentum, we will see. If it lacks momentum, we're going to see it try to meander back down to this 106, 500 area and then eventually break down. Now, what's interesting, in my opinion, is this secondary light blue excess phase peak pattern rolling over. So we shall see if we get that breakdown move or if we continue upward. Obviously, it would be very interesting to see either direction, because at this point, we've got the bigger, broader excess phase peak pattern rolling up over here, setting up this little minor excess phase peak pattern. If we do get the breakdown, it's going to be a big one. If we get the carryover or invalidation back to the upside, which could happen, then we're looking at probably one, I got to do the math here, but I would estimate after this rolling trend that we would be looking at about 116, 118 to the upside. So I'll give you an example, probably somewhere around this area, 116, draw it as a box. 116, probably somewhere around that area as a upper target. If it were to break out, that would probably be a fairly safe range for an upper target, and we'll see if that actually happens or not. Okay, guys, that's it for now. Good luck this morning and go get some.